Bitcoin on the weekly giving up those gains. ADA weekly, Ethereum weekly. Look at this. All these previous weeks of gains we saw, this current weekly candle, look how ugly that is. I just want to say it could not be any better of a move. And in this video, I want to explain exactly why that is. I want to break down Bitcoin, ADA charts, Ethereum charts, kind of identify where we might see the bottom. But I also want to talk about more deeply the fake outs that we might potentially see along the way. So please hit the subscribe, hit the like. Let's embrace this dip because I think it's going to be the last one before the parabolic bull run. And I actually did a video 8 days ago. I'm not going to show you a clip, but you can actually see Bitcoin 42,000 when I was doing the video. We were discussing this move down here, $30,000 area as just this pullback prior to the Bitcoin halving. And I titled it Crypto Warning. One of the warnings I had was if we get the dip, and we're well on our way. That was 42,000 rejection off this macro 618 Fibonacci. Not going to talk about that too much in this video, but if we get the dip, I was saying, I just think this is going to be the last dip, the last final opportunity. That was the warning before this Bitcoin halving and the next parabolic bull run. Keep in mind, like last bull cycle, even the previous bull cycles before that, retail, the fear of missing out, it was really pumping price. We'll have that again, but this time around, we have Bitcoin institutional demand in play. Their eyes are on crypto in general. And imagine that, these massive firms with that fear of missing out along with retail. Imagine that. And this dip is happening. It is what it is. It is the most common thing that could possibly happen in crypto right now. You zoom out on a chart, just look at even the last bull market, 2 red weekly candles in the middle of the last bull market for Bitcoin on its way to new all-time high. You know, the beginning of the bull market, right before it broke the bull market doors. Look at this ugly weekly candle right back to the 20-week moving average. Right now, you look at a Bitcoin chart, it's down a little bit. Bitcoin's falling, consolidating into 20-week moving average, potentially even lower, 50-week moving average, sitting at around $30,000 or so. I want to talk about potential fake outs along the way. As I talked about, I believe in yesterday's video, 20-day moving average, crossing below the 50-day moving average. Not the nicest looking move. Finally, the Band-Aid is being ripped off, right? After this overextension to the upside a couple times. And then especially here, right to the 618 line, which I do not think, I mentioned this the other day, I don't think Bitcoin's going to break above $48,000. That 618 line, the bull market doors, until after the Bitcoin halving. What I do think will happen, and this is what I'm trying to identify now, is I think Bitcoin will kind of fake us out to the upside, maybe to the upper trend line of this yellow rising wedge, right? Maybe there. But more importantly, maybe to these moving averages, right? The 20 and the 50 confluent around 43,000 right now, but that could kind of obviously trend down into Bitcoin, maybe at a very confluent area of resistance around $41,000 at this upper trend line. Bitcoin just pulling back in. If we look at these moving averages, this happens so often when a 20 is crossing below or above a 50. You can actually even look, the 20 crossing above the 50 back here, that green above the blue. What does Bitcoin do? Boom, pulls right back into it, right? Before continuing higher. So to the downside, pulls back into it before continuing lower. This would be right here, the fake out that I'm trying to anticipate right now, because I know on X, even on YouTube, maybe people get very hype if Bitcoin starts approaching $40,000 even right now, or $41,000 or $42,000. I'd be watching this area of resistance. There's moving averages is a very big deal for me in terms of waiting for true bullish confirmation. That would be for Bitcoin to break above those areas, not see resistance. Resistance would just be a lower high, and then we're going lower to our targets. Remember the targets. It truly is kind of in between the 20-week moving average around 36,000 and the 50-week moving average just around $31,000. So that range right there, we'll see what Bitcoin does. And I just want to point out on the daily chart, check it out. Bitcoin is approaching oversold. Now, if we look at Bitcoin, let's just take this dip for instance back here when Bitcoin dipped in August, right? It fell into oversold and actually just trickled down even lower. But what we need to wait for and identify is, look at this. Look at that bullish divergence, higher lows on the RSI, the momentum oscillator. Are we going to get a similar scenario? Bitcoin falls, RSI falls and oversold, but starts trending up as Bitcoin just continues to fall sideways to our area, to our targets, right? $30,000 to $35,000 is the range, somewhere in there. And then we get the bottoming out formation going into Bitcoin halving. So that's what I'm watching for. And even notice on the 6 hour, we might even start seeing volatility, a little bounce to the upside. It's oversold on the 6 hour. And when we start hitting these areas, there's a case where Bitcoin could bounce, right? So just check it out. We get these little bounces, big bounces, but they could truly happen where Bitcoin's just faking people out to the upside a little bit to those moving averages. Go to something like ADA. ADA is around 45.5 cents right now, under 50 cents. And we have a very similar thing playing out on ADA, and that is to say the 20-week around 41, the 50-week around 36. And just as Bitcoin is so bullish in this environment of falling, ADA is as well, just as bullish, if not more, because it's an altcoin. And I think once the bounce comes, it will play into, especially if it starts happening post Bitcoin halving, it will play into that parabolic type of vibe. But the move that's happening right now, again, I just want to point out, very similar to Shelly, back to these moving averages, the 20 and the 50. But I want to go to the daily and discuss for ADA what a fake out might look like. So if you go to the daily chart, you can just see ADA not quite at oversold just yet. And this is a nice bottoming out area for ADA that we probably would want to wait for. I'm not saying it's definitely going to reach there, but I think it will. I think we'll reach oversold area, this bottoming out area on the RSI in terms of ADA. And if we go to the 6 hour though, I want to point something out. ADA also oversold. So this plays into the potential fake outs that we might see. You can see ADA was oversold on the 6 hour not that long ago, earlier in January, and it bounced nicely off that area. Do you remember this? This feels like yesterday. 46 cents or so, boom, bouncing right back up to 60 cents. Look at that. That's a really just volatile move. It's a 30% move on the 6 hour chart. And then we bounced and we're going lower. So we're in a very similar area in terms of oversold right now. We could get, again, another bounce to the upside. We go to the daily chart for some context. Well, where would resistance be? Because it could be a fake out, whether it's now, whether it's in a little bit. The 20-day around 52 cents, 53, the 50-day around 56 cents. So maybe we don't have as much of a pump out of oversold on the 6 hour. This is a daily, by the way, but maybe we have a nice little run. People are getting excited because we're approaching 50, maybe even breaking above 50 a little bit. It could just be a lower high at these moving averages on the daily before going lower to our targets potentially that are in play for ADA. And we know the targets, the 50, 36 cents, the 20-week, 40 cents or so. And that is just in play on the macro as we consolidate on this weekly chart. And Ethereum, same exact type of thing. Now, Ethereum, I think, is going to be a little bit less volatile than ADA, obviously, because it's been less volatile to the upside. 20-day or 20-week moving average around $2,000. We go to Ethereum now on the daily chart. I want to point this out. Ethereum has been truly holding its strength, I would say. But again, less volatile to the upside. It's going to be a little bit less volatile to the downside. But Ethereum has a little bit of a ways to go until oversold with this 200-day moving average just below that $2,000 mark, which is around 1930, right? So remember, over here on the weekly chart, that 20-week moving average right around 2,000. Now, if we go back to Ethereum on the daily, check out what's not happening on Ethereum daily. That is to say, these moving averages, the 50 and the 20, there's not really this cross happening on Ethereum. And I think Ethereum could get to its targets to the downside without even seeing the volatility of these moving averages. But what I do want to point out is we saw the support above the moving averages, and right now Ethereum, just like the others, is closing candles below the 50, below the 20, and that's a big deal. Pullback to the upside is exactly the same. It doesn't need to be a 20-day moving average crossing below the 50. That would be a move to around 2,300 for the 50-day moving average, a potential fake out. We go to Ethereum on the 6 hour. Just want to make a note of something. Ethereum on the 6 hour, we have oversold on the 6 hour, quite oversold actually. So we might see a little bit of a bounce sooner for Ethereum than others. But either way, if crypto keeps falling, that $1,900 to $2,000 area for Ethereum is kind of this really sweet spot area, especially on the shorter term charts. But on the macro, it would be the 20 at 2,000 and the 50 around just below 1,900. That would be the area I'd be watching for Ethereum to do its own consolidation. You can just see, not as drastic as something like ADA or other altcoins, maybe 15% to the downside. But we will see. And again, I just want to mention, there are other things in play than just moving averages. We take a swing low to swing high. We also have a Fibonacci, a higher low Fibonacci, which has a 786 around 17 something, right? So there could be more volatility below the moving averages, touching the 200, maybe wicking below the 200, even wicking below the 786, right? 1700. But I would say that range right there, 1700 to around 1975 is a nice area to track on the macro for Ethereum support. But again, just like Bitcoin and ADA, be ready for fakeouts. Be ready for these moves to the upside that look like, all right, we put the bottom in, we're going back up, because those moving averages, the daily moving averages, they are above all of these charts, right? And I'm talking about Ethereum. There's those moving averages, the 20 and the 50 in blue. We have ADA, 20 and 50 in blue. And then we have Bitcoin on the daily, 20 and 50 in blue, all the way up here around 43,000. So be careful for those fake outs. That's what I'm doing. I appreciate you watching, everybody. I hope you're doing well in this dip. Again, I'm embracing it. I think it's all good. I think it's going to be fine, but that's just me. And that's all this is. I have no idea what's going to happen next. Just tracking my crypto journey with y'all. Hit the subscribe, hit the like. I'll see you in the next video. God bless.